FICCI president talking to CNBC TV18, but let's get in some more views from corporates. It's a good show from Tata Steel in the third quarter as India business beats estimates and debt reduction is a booster shot. Europe, however, comes in below street expectations. Our colleague Nigel D'Souza spoke with V Narendran, the MD and CEO of Tata Steel, a while ago and began by asking him how realizations are faring in Q4 versus Q3.
I think in November and December, we saw the prices drop both internationally and in India. And in India, the prices have started picking up so as it is in the international market since the last 2 weeks. I think this is also riding on the higher coking coal prices. So we had guided that Q3 would be about 2,500 rupees better than Q2. I think we were at 2,100 or something in India. And this quarter, we are guiding that it will be about 3,500 rupees lower than last quarter, simply because the export prices are much lower than it was in the previous quarter. The domestic prices are picking up. We're waiting to see what happens in the next 2 months, but we're exporting more and the export prices are lower than the last quarter. So overall guidance for India is about 3,500 rupees lower this quarter compared to the previous quarter. In Europe, it will be about 15 pounds per ton higher in this quarter compared to the previous quarter.
Oh, that's encouraging. 3,500 rupees lower on a sequential basis. That's Q4 versus Q3. Another important variable will be coking coal cost. That's been all over the place and been spoiling the party in a way. In Q3, how much higher were prices, that's coking coal cost, in comparison to Q2? As well as now in Q4, how much higher will they be? Go ahead.
So the coking coal prices in Q3 were about $80 per ton higher than in Q2 in India, and about 80 euros per ton higher. About 40 euros. About 80 euros per ton, higher in Q3 over Q2. In Q4, we expect the coking coal cost to be about $40 per ton higher in India, and in Europe about 40 euros per ton higher than Q3. But in Europe, we'll see the benefit of lower iron ore prices, which has been dropping quarter on quarter. So we've had the advantage of that in Q3 over Q2, and we'll have further advantage of that in Q4 over Q3. While I guided you that the prices will be lower, I must also tell you the volumes will be much higher in Q4 than Q3, both in India and on a consolidated basis.
Okay, all right. So putting all these three variables together then, sir, the pricing, that is the selling price, the input cost, that's both coking coal as well as iron ore, will the EBITDA per ton in Q4 be higher or lower in comparison to Q3, both for India as well as Europe?
EBITDA per ton in India is likely to be lower. EBITDA per ton in Europe is likely to be higher.
Okay, all right. That's a fair number then. Also, the biggest positive has been your debt reduction. That's been something that's, you've clearly beat most expectations. 9 months, you've already done around 12,500 crores of net debt reduction. By the end of this year, what do you end with? Or can you keep up this run rate? You're paying 5,000 crores per quarter for the last 2 quarters back. Q4 as well, you'll keep up to that run rate?
Yeah, we will. We will. The only thing to keep in mind is Neelachal is part. So without factoring in Neelachal, certainly we'll keep that run rate. We'll do better than that. But we have to obviously plan on Neelachal, and if the transaction concludes in this quarter, we will see the impact of that.
So how do you fund then Neelachal Ispat? Tata Steel Longs, will be acquiring it, and obviously the parent will infuse some money. So how does this transaction work out then?
So basically, Tata Steel as a parent will be funding it. 50% will be equity and 50% will be debt. We will also look at it. We will have some bridge loans, which we hope to pay back in the next few quarters. So, and as you can see from our numbers, I think we have the liquidity and the cash surplus that is required, and the deleveraging that we will do this quarter will also help us fund the transaction. So at a Tata Steel level, there's no issue. Tata Steel Long Products will need the support. We are working all that out.
Is there a possibility that you'll merge both the two entities? That's Tata Steel as well as Tata Steel Longs. I think in Tata Steel Longs as well, the promoter entity already holds a high percentage. So how do you infuse money then there?
So we are close to 75. Yes, at some point in time in the future, we will look at all these possibilities. Just now, we're working out the details on how best to do it in the most efficient way.
Merger on the cards between Tata Steel as well as Tata Steel Longs?
It's a possibility, but we'll talk about it once we are there and we've got all the necessary approvals and we've worked out the mechanics of it.
Okay. All right. Since you've gone ahead and bought NINL asset, and you've not paid you're paid pretty much a premium valuation. So as per what the street estimates. But you obviously have guided that you're going to increase capacity big time from here. In the next few years, it's going to look very, very different. Now, going by these valuations that you've acquired NINL, would you be tempted to go ahead and buy NMDC steel plant as well, the 3 million ton plant?
No, that's not on our radar simply because NINL was of interest to us because it was long products and we wanted a site to create a long products capacity and a world-class long products complex. In Kalinganagar and Angul, we already have the land available for us to expand in flat products. Kalinganagar can go up to about 16 million tons quite easily. Angul can go, which is the Meramandali plant, can go up to 10 million tons. So we have enough headroom there for flat products. It is in long products that we wanted to have the headroom, and Neelachal gives us that headroom.
So NMDC's plant is not on your radar?
No.
What about the overseas assets? The Southeast Asian business, you had sold, I think, 30-35% of that business. So you're still pending with around 60% of that business. Are you looking to exit that business? And what about the European business? Are there plans to exit it, or do you want to run that business?
No, I think both the Thailand business, which is still with us, and Europe is pretty much standing on its own, taking care of themselves. So we are in no hurry. We are adding value every year. So we will, for the time being, just focus on running the business as well. I think both have turned around and can stand on its own. So there is no pressure for us to exit. And we've also hit our deleveraging goals, even without those exits. So this allows us more options for the future.
So taking into account the NINL acquisition, Mr. Narendran, as well as the 4,000-5,000 crores on a quarterly basis that you have been reaping, that's likely to be the case even in Q4. By the end of FY23, what should Tata Steel's net debt number look like? Because you have capex, you have some inventory, you're going to be putting some money into Tata Steel longs as well. Currently, it's at around 63,000 crores. By the end of FY23, what will that number look like?
So I can't give you an exact number, but I think we've said that we would bring it down to below 1 net debt to EBITDA. We are already there and will be thereabouts.
So is this the end then of the deleveraging cycle?
Not necessarily. I think for now, like I said, we will digest the Neelachal acquisition for the next few quarters, and then we will continue to go on track because I think the deleveraging has been very strong during the difficult times as well. So I think we stay committed to our deleveraging goal. But at the same time, I think at that time we had guided a net debt to EBITDA of 2. Originally we had said 3, then we brought it down to 2, then we said 1. And we are at 1. So I think 1 is a comfortable level, and in the long term, certainly 2 is what we are looking at.
Okay, so that's the management of Tata Steel talking to CNBC TV18. If you look at the stock performance, it's up a whopping 80% from its 52-week low. So good going for Tata Steel. They also expect the volumes to rise both for the Europe as well as the India business. Take a short break, but Vinkesh Gulati, the president of FADA, joins in to discuss the Jan retail vehicle sales. Stay tuned.